The UK economy is currently facing a crisis, with long-standing economic weaknesses coming to a head. The country's leaders seem paralyzed in the face of this crisis. The pound has crashed to a record low against the US dollar, and the Bank of England has warned that the economic outlook for the UK and the rest of the world has deteriorated materially. So in this video, we are going to discuss UK economy crashed. Now, before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. UK financial markets were spooked again Wednesday, although, unlike last fall, the turmoil was unrelated to a new government budget aimed at reversing Britain's economic decline. UK Finance Minister Jeremy Hunt was careful to avoid the drama that engulfed his predecessor's September mini-budget as he laid out new spending and tax plans Wednesday. But as a crash in Credit Suisse (CS) shares reignited fears triggered last week by the collapse of Silicon Valley Bank, the FTSE 100 sank, and the pound fell against the US dollar. Real wages have taken years to recover to their 2007 levels after the financial crash, and weak productivity growth has blighted the economy. Economist Nouriel Roubani has warned that the mother of all economic crises looms, and there will be little that can be done to avoid it. Fortunately for Hunt, the economic picture has improved a little since he scrapped most of the disastrous plans for debt-fueled tax cuts and a spending binge presented by previous Chancellor Kwasi Kwarteng. Falling natural gas prices have taken some heat out of inflation, while providing a boost to government finances strained by energy subsidies for households. The Office for Budget Responsibility, OBR, the government's fiscal watchdog, now expects the UK economy to shrink by just 0.2% in 2023, compared with the 1.4% fall it predicted in November. Still, the United Kingdom is the only major economy that the International Monetary Fund forecasts will contract this year. Inflation continues to erode pay, worsening a long-standing decline in living standards. Supply chains remain fragile, and the country is experiencing the worst wave of strike action in 30 years. Financial market turbulence could make matters worse if UK banks respond by extending less credit to households and businesses, weighing on consumer demand and investment spending. More than 133,000 civil servants were due to walk out over pay, pensions, and job security Wednesday, joined by teachers, transport workers, junior doctors, and some BBC's journalists. Some economists thought Hunt might boost public sector pay to put an end to rolling strikes, but he made only a passing reference to industrial strife, even though the economy lost nearly 2.5 million working days to strikes between June and December. Hunt did, however, pledge to extend government support for energy costs, keeping in place a $3,037 cap on annual bills until the end of June, which will save the average family $193. He also unveiled plans to boost business investment and grow the workforce. These measures should be pro-growth, said Chief Economic Advisor to the EU Item Club, Martin Beck. Although whether they will lift the UK out of a long period of slow expansion appears debatable. Tackling Britain's growth problem. Despite a laundry list of challenges facing the UK economy, from Brexit and labour shortages to striking workers and a crumbling public health system, Hunt rejected the narrative of decline. CNN Business before the bell before markets open. Start your day smart. Get essential news and analysis on global markets with CNN Business Daily Newsletter. Britain is facing a growth problem with low productivity and economic growth. This issue has been exacerbated by external factors such as Brexit and labour shortages. To address this challenge, experts suggest formulating a strategy to deal with low growth and high inequality. One potential solution is implementing smarter taxes to ease the productivity crisis. In the autumn, we took difficult decisions to deliver stability and sound money. Today, we deliver the next part of our plan, a budget for growth, he said. Not just growth from emerging out of a downturn, but long-term, sustainable, healthy growth, all whilst making our country one of the most prosperous in the world. Britain's Prime Minister Rishi Sunak and EU Commission President Ursula von der Leyen Wright shake hands after a press conference at Windsor Guildhall, Windsor, England, Monday, February 27, 2023. The UK and the European Union ended years of wrangling and acrimony on Monday, sealing a deal to resolve their thorny post-Brexit trade dispute over Northern Ireland. Brexit slammed the UK economy. The new Northern Ireland deal gives it hope. Britain is the only G7 economy yet to regain its pre-pandemic size, and a lack of investment is partly to blame. As part of his bid to balance the books, Hunt stuck with plans to hike corporation tax from 19% to 25% come April, noting that the United Kingdom would still have the lowest headline rate in the G7. The main causes of Britain's low productivity are weak investment, innovation, and management. Additionally, low demand due to the financial crisis, austerity policies, and Brexit have been identified as major causes of low productivity. The UK's productivity problem has been exacerbated by external issues in the global economy. Despite being a high-tech country, the UK has seen slow rates of productivity growth over the past decade. But to lift growth and tackle low levels of business investment, Hunt unveiled tax breaks that will allow companies to offset every pound invested in equipment, plant, and machinery against taxable profits for the next 3 years. The OBR expects this will increase business investment by 3% for every year it is in place. Free childcare to ease labor shortages. Labor shortages are also a huge constraint on economic growth, and Hunt announced a raft of measures to encourage parents, retirees, and those with disabilities or in poor health back into work. There are currently more than 1 million vacancies in the UK economy, about 300,000 more than before the pandemic, and 21% of the working population is economically inactive, according to the Office for National Statistics, meaning they are unemployed and not looking for work. Alongside Brexit, early retirement and ill health are major factors. Some 3.5 million people between the ages of 50 and 65 are not part of the labor force, according to Hunt. In one of the biggest budget giveaways, Hunt introduced 30 hours of weekly free childcare for working parents with children over 9 months, to be implemented in stages from April 2024 to September 2025. The Chancellor said the measure would reduce childcare costs by 60%, saving families $7,800 a year. To encourage people over 50 to extend their careers, Hunt increased the annual tax-free allowance for pension contributions by 50% to $72,360 and scrapped the $1.2 million lifetime allowance on tax-free pension contributions, which penalized workers with larger pension savings and which has been cited by some doctors as a reason for retiring early. SVB could depress UK bank lending. While the prospects for the UK economy look brighter than in the fall, the sudden collapse of Silicon Valley Bank could weigh on growth in the near term. Issues in the US banking sector present a new source of uncertainty, and some unexpected caution may need to be attached to the Orbe's less downbeat forecasts, Beck of the EY Item Club said in a note Wednesday. The collapse of SVB continued to reverberate through global financial markets Wednesday, pummeling banking stocks, including in the United Kingdom, where financial services still play an outsized role in the economy. London fears for its future as companies defect to Wall Street. Although the sell-off is not expected to cause a broader banking meltdown, it will make lenders more cautious, which could have significant implications, according to Berenberg's senior economist, Callum Pickering. It is likely that UK financial conditions will remain tighter or potentially significantly tighter over coming months than they would have been without the US banking troubles, Pickering said in a research note Monday. All else equal, tighter financial conditions will weigh on consumer demand and reduce the availability of credit for investment spending. If banks reprice or reduce lending, that may make the UK recession a touch bigger than the 1% decline Capital Economics expects this year, said the firm's chief UK economist, Paul Dales. But as it stands at the moment, it doesn't look as though a repeat of the global financial crisis is on the cards, during which UK real GDP fell by 6%, he added. There are several proposed solutions to improve productivity in the UK. One solution is to expand and reform schemes for boosting the productivity of small and medium-sized enterprises. Another solution is to keep low barriers to trade and competition in the UK service sectors. Additionally, training staff well to do more work in less time and reducing the time employees waste on commuting are suggested. Research has also uncovered the reasons behind low productivity growth in the UK and suggests ways to address the issue. Let us know your opinion in the comment section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.